So friends, if we see this RBI circular, which has come very recently, the month of August, on 6th August, where they have tried to ease out the some of the areas, the partial credit guarantee in comparison to the earlier norms actually. So one of the most important thing is that they have allowed to the various stakeholders the umbrella of the partial credit guarantee issuer. So like banks, AFI, AIFI, this All India Financial Institutions, NBFCs. So NBFC and HFCs have been included first time. This is a good thing. We have Virender Pankaj who runs an NBFC, so definitely they can also issue the guarantee now. And this percentage of the overall bond issuance, the guarantee can be of the 50% amount actually. So this is a good thing. Earlier it was 20%, now it is 50% actually. And the advantage of this partial guarantee can be in the rating enhancement. So if suppose if somebody is having the rating in the category of maybe A rating, and as per the regulatory requirement in the country as of today, the PF funds or the insurance company can invest only on those bonds which are having double A rating. So with this partial credit guarantee, they can get the advantage of it, and they can be the double A rated category after having the partial credit guarantee announcement, and they can be eligible for the bonds from investment from these institutions. So this is really a very big benefit if this is possible. Then if we see the investor base, definitely if you are in the higher rated bracket, then a lot of new investors will attract towards investments in your bonds. And the borrowing cost, definitely when anybody will get the higher rating, like the lending is always, or the investment is always linked to the rating criteria, or whatever the rating symbol we have. You are in which family actually of the rating, A, AA or AAA. So this will also help you to reduce the borrowing cost, and which in turn will help to get the more viability of your projects, or you can get some cash flow in your hand which you can use for the other projects.
Now, infrastructure is a sector which is very long term. So obviously it has certain risks and certain rewards, which, probably everyone on the investor side may or may not understand and appreciate to equal extent. So logically, the risk should sit with people who understand that risk best. But investment should not be limited to only those people who understand risk best, because there are very few. India has only 9 infrastructure finance companies. Only 9. And out of those 9, Aseem is the only one which operates in private sector. All rest, all 8 operate in government sector, managed by Government of India. So it's very, very narrow. That's not enough. So we need to bring everybody onto the table, and that is where something like partial credit enhancement or credit enhancement in general, because what it does is it allows other participants who may not be infra experts today to come and invest. So which is why credit enhancement is important. And credit enhancement, there are many ways to do credit enhancement. Partial credit enhancement is one of them, and RBI has come out with guidelines which are, I would say, progress from what it was. But obviously there is a lot more, and maybe you will hear that from my colleagues also here as to what all we need to do going forward. But there are other ways to do credit enhancement also. Internal credit enhancement, for example. So I remember my team had once done, and that time it was first time in India. 17 SPVs were put together, and we pooled their cash and enhanced the rating of the pool by 2 notches, and that led to that paper which was underwritten by us, then being distributed into the market. It happened about 7-8 years back. After that, today cash pooling is a standard feature in India. There are so many transactions which have happened after that deal, but till that time nobody had done it. So to that extent, I think the transaction which has happened now and which we are going to be discussing is a very good step, because I believe this should lead to many more transactions going forward in future, and through all possible means of credit enhancement, so that we can bring more people. Our regulators have restricted that pension money and insurance money cannot be deployed anywhere which is less than, I think, double A or maybe double A plus as well. So now if it cannot be deployed, the only way we can bring capital to infrastructure is by taking the rating to double A. So, कुएं को प्यासे के पास ले जाना that is also okay. Anything and everything that needs to be done, we have to do. So this, from that point of view, it's very simple. It has to work, and it has to be manifold from what where we are today. We have to do it 100 times more.
Especially in case of infrastructure of green. I mean, when I say about green infrastructure, there's a long gestation period. Your projects are, your PPAs are 25 years, your projects life cycles are 25 to 30 years. So it's a long gestation kind of a sector or a segment, I would say. So there, first of all, the investor would be a little bit skeptical because anybody would like to have a smaller gestation kind of a period projects where it turnarounds very fast. In such scenario, it is very important that you get support from a better rated entity, or you can somebody like GuarantCo, or somebody like in domestic market you have IFCLs or REC, these kind of things. What happens is that you have the execution capability, you have the ability to execute. Like for example, the KP Group has already done more than 2 to 3 gigawatt of execution, and that's what I mean. That comfort you can give to that guarantor, and with that comfort you can convince the investors also and get the required funds, because again, I mean, the funds requirement are huge when it comes to the infrastructure of what is a green or a renewable energy infrastructure. Other part which we've learned on the ESG part, because we are an renewable energy company and we wanted to have the compliance, because there are a lot of compliance when you raise a green bond. It was a normal NCD would have been easily for us, but with the support, because we have to do align with the compliance of GuarantCo also. It's an international entity, they have their own ESG compliance, then with a SEBI ESG compliance. So all this have to be in line. Only you are able to do that only when you have your in-house properly, you have your books properly, you have your transparency level good, you have your what you say, SOPs for the ESG compliance and everything. So overall, if you see what we got support from GuarantCo, we got a very good coupon rate because of that. I understand, we could have been somewhere at 11 to 10 to 11% or 12%, but with the support of GuarantCo, we got the 8.5% coupon rate. That was something. Multi-notch upgrade from almost 4-notch upgrade, the support that we got from GuarantCo. But also, I mean, it is not that it is a very long process. We had to go through it because again, what Virender said that domestic market was not so keen about getting into these kind of arrangements. So we had to, and GuarantCo has done that in multiple countries, and we appreciate that they had that comfort with us after going through their due diligence and everything. So overall experience was very good, and we were able to be the first starter in this, and we look forward that these kind of assignments other players also can do it, provided they get a very good supporter like GuarantCo and a good investors like Aseem Infra, because in our instrument also, Aseem Infra is the biggest investor. After that, there are SBI Cap, there was Geo Finance, there was Edelweiss. In fact, the requirement or the need, or the ask of the majority of the players was, even Aseem Infra wanted to take the entire, but we had a little bit portion carved out for others also. Along with that, even international player like Standard Chartered also, they wanted to get into at a full rate, but we said that okay, fine. It opens a door for first transaction. Now we'll go through other transaction and it will help us raise more funds for our growth.
And NBFCs like us are going to hugely benefit out of this. And I must say that our association with GuarantCo has really helped. So GuarantCo did our first deal last September, and the current one which we are doing with them is the second deal. And here we have got a 6-year bond issuance, which is really very helpful for us, because on an average we were raising funds for a 24-month period at the best. So here we getting a 6-year bond. It's really helping us in terms of our repayment, because our portfolio is also shifting from two-wheeler to larger ticket loans like cars and CV, which are longer tenure loans also. So with a larger tenor funding, it will help in our ALM as well. So I think this is a very, very significant move. And as Salim was mentioning, we also got a free upgrade, a triple upgrade in our rating. We also got a AA plus in our bond. And that also has a lot to do with the intervention of GuarantCo. So I think very, very interesting time.
Because see, RBI has for an international overseas guarantor, which is a DFI like ourselves, there is a guideline or there is a cap for charging 2% of the guarantee fee as per the regs for the bonds. And I think we follow we have followed those guidelines. But yes, each transaction is different. The underlying risks are different. The underlying mitigants are different. So every transaction is priced differently. But when you say about uh, what advantage, I think it goes more than the cost. So somebody who's doing it for the first time may not get those benefits in the first transaction, but then going forward, if that issuer wants to do a similar structure with somebody who's comfortable now with the credit as an investor, then that would actually translate into benefits for that next transaction. That is, I think, uh, my way of looking at it, and it has to be looked at in the long run and not as a one-off, because a company which is in the renewable space like KPI is, and they have got such a strong pipeline, they will keep requiring capital, for long-term capital, for executing those projects, and this capital is required in one go. So they need to have a financial close for the entire project. It can't be piecemeal. So I think that's where these sort of structures help with also bringing in new investors who may or may not work with them on a standalone basis to begin with, and that is also our goal. Like Salim ji said, we don't want to be doing the first transaction, second transaction, third transaction, fourth transaction, because somewhere this is a tool for developing the market, and market development also entails that people don't need a guarantee.